Let's delve into those inflation figures that were released today. Would you say that it was a surprise number given the fact that we saw a previous number of 11.9%? It's sitting up to 12.1%. Is this a risk going forward? Because it could change the monetary policy stance if we see it being sticky at these levels.
Yeah, that's what I was thinking as well. It's not too much of a surprise because the food inflation is partially driven by the increase in fuel prices. You recall at the beginning of the year, some of the subsidies were removed in Nigeria, so fuel has gone up. And because there's a lot of transportation by road involved, a lot of the food has to come in from the northern part of the country. That has increased transport costs. So it's not surprising that we're seeing it translate through to the food basket. And we expect that inflation is likely to stay high at these levels, maybe through the next few months. There was some indication that monetary policy would soften a little bit, maybe from the next meeting. But with these new inflation figures coming, we're not so sure. Maybe it will stay stable a bit longer at the current levels.
Let's also just take a look at other news coming through from Nigeria, Kubi, because we are sitting in positive territory into today's session. The Naira looking pretty strong against the US dollar. So it seems that sentiment is up. And one of the reasons is because we actually saw some nice numbers coming through from a lot of the banks out of Nigeria. And this was the big game changer.
For first quarter 2012, I think we're seeing what we can call green shoots of recovery in the banking sector. 2011 still saw a lot of banks taking losses. There was still a lot of loans transferred to AMCON. AMCON has had a lot to do, issued new bonds and all that. And in 2012, we're seeing reduced non-performing loan figures. We're seeing profits coming through, even though interest expenses have gone up significantly, maybe third quarter 2011, first quarter 2012. Generally, banks seem to be coming out of the woods. At least so far, there have been no surprises.
Let's also take a look at EcoBank. What is your prospects for this company, given the fact that the PIC has now invested around 20% into EcoBank? We know that it, of course, has diversified. The company has diversified across Africa. Is this a buy for you as well? Do you see it as an attractive investment opportunity?
It certainly is, and that's for two reasons. Yes, we have PIC coming in and injecting a lot of equity. That will give EcoBank strength for expansion across Africa. Maybe there are some countries, you mentioned Zambia, that there's been an increase in capital. Some other countries across Africa, yes, they need increased capital for the banks. So this gives EcoBank the strength to recapitalize anywhere it needs to across the continent. And then at the same time, just before this, there was a merger with a very large Nigerian bank with a lot of branches. So what we're seeing now is an EcoBank Trans-International that has scope to spread across Africa. They also have scope to spread across Nigeria with a huge number of branches they've acquired. So there's certainly going to be an interesting player to reckon with, and 2012 should be a game-changing year for them.
Let's also just move away from sort of the banking sector and let's touch on what we see on the consumer side of things. Namibian breweries released first quarter results and they were looking quite strong. We saw this stock doing really well last week. It's still sitting pretty much in positive territory. Are you expecting this performance to continue, Kubi?
Yes, Eleni, and in 2011, we spoke about the banks before. They had a pretty choppy 2011, a mixed bag of results. That did not happen in the consumer section. The company's food and beverages did extremely well. If you look beyond the banking numbers, they've kind of supported the stock market. Nestle, Cadbury, Nigerian breweries, they've all done extremely well. They had a good 2011. They're posting reasonable dividends. If you look at the dividend yields, they're pretty good, and we expect to see more of that through 2012.
With the likes of Guinness as well, this stock also getting quite a bit of appetite from investors, Kubi. I mean, that stock was up around 4.5% last week. I'm not sure what it's been doing this week, Kubi, but again, within this space, would you be diversifying into both Nigerian breweries and Guinness as well to get exposure into both companies, or do you prefer one over the other?
Yes, I think so. No, I think they're both strong brands and it would probably be best to do both. They've both put in a lot of investments in the country, different parts, the south and the southeast, in terms of new plants, new machinery, new production lines, rebranding of products. They've both done a lot of that. So I think it would be good to put eggs in both of those brewery baskets. that will be pretty good. But at the same time, don't forget Eleni, because banking stocks are so low, they're probably a pretty good bargain at the moment. You buy banking stocks now, and then maybe 12 to 24 months horizon, you'll be seeing some good returns on that as well.
Yeah. Okay, so Kubi, we know that this is tug of war, and I always ask you this question because I want you to give me an update. You actually tell us in terms of what's happening on the trend front.
Yeah.
So bond market, fixed income versus equities, is this finally now going to see the turnaround now that we've had confirmation that we're starting to see these green shoots out of the banking sector, as you said, for the first quarter?
Yes, a cautious turnaround, and I say this for two reasons. One, banking stocks pretty attractive, some of the more mature stocks giving very good returns. And then two, because there's been so much demand in the fixed income space, we've seen yields fall from a spike of 17, a peak of 16.5. We're now looking at 14 and sub 14%. So we're 300 basis points off the cream of the curve. And I think that if rates continue to move down, if there's an MPC decision that takes rates maybe 100, 200 basis points lower, this might be the time to start mixing up the portfolio a bit, because returns will come in through the capital markets. And then at the same time, the director of the stock exchange has been talking up the market. We have market makers that have been appointed, so there will be more liquidity, or we expect that there will be more liquidity over the next few months. So yes, this is the time to mix up the portfolio.
All right, so as this exciting new trend then occurs, we're seeing auction today. I know you've been looking out for that, for us, and then the T-bill auction as well. What kind of performance are you expecting there? I know that you are going to be looking at those bond yields very closely.
Yes, I think bond yields probably around current levels, a slight dip. But from what we're seeing on the Treasury bill side, the kind of interest we're seeing, both local and international, they've pulled down. I mean, if I look at the trend of the last 6 auctions, with the exception of maybe a correction on the 91-day or a correction on the 364 days, they've generally pulled down auction after auction. So we see probably another 40 basis points, 30 basis points loss on those rates again. I said sub 13. Sub 14, where we were seeing 15 before. So we think there's going to be a similar trend, but that will be confirmed in the next hour or so.